One of the trickier parts of producing a cash flow statement is going from net income to cash from operating activities. So we're going to do an example of that here. And we have some information given to us from the income statement, net income given as $10,000 and depreciation given as $1,500. And we also have some information given here from the balance sheet, receivables, inventory, payables, and accruals, all current assets and current liabilities. So the first thing that we are going to realize is that when calculating net income, depreciation is subtracted off, but depreciation is not actually a use of cash. So to find cash from operating activities, we need to add depreciation back to net income. So we'll leave that number here. Secondly, we have to recognize that changes in these current accounts also produce or use cash, and they do so according to these 4 rules. First, cash is used when assets increase. You can think of purchasing a building here. The building is an asset, you've increased your assets, but it used cash. Secondly, cash is used when liabilities decrease. You can think here of paying off a loan. Paying off the loan decreases your liabilities, but it used cash to pay off the loan. Third, cash is produced when assets decrease. Here you can think of selling an asset that decreases the amount of assets that you have, but it produces cash from the sale. And fourth, cash is produced when liabilities increase. Here you can think of taking a loan. The loan is a liability to you, so your liabilities increase, but the loan gives you cash. So cash is produced. So going back to our balance sheet items here, receivables have gone up this year compared to last, and receivables are an asset, and according to our rules, cash is used when assets increase. So we need a negative number here. We are going to do 1,400 minus 2,200 to get the negative amount, 800. Inventory, also an asset. It has decreased from last year to this year, and according to our rule, cash is produced when assets decrease. So we need a positive number here. 900 minus 700 will give us that number. Payables have decreased, and accounts payable are liabilities. According to our rule, cash is used when liabilities decrease, so we need a negative number here to represent the use of cash. We will get a negative number by taking 180 minus 200. And last, accruals, also a liability. They have increased here, and cash is produced when liabilities increase, so we want a positive number here. We can get that with 130 minus 100. So in total here, I'll do the sum, negative 590, and we'll carry that up to here. And so we start with our net income, $10,000. We recognize that depreciation has to be added back in because that wasn't really a use of cash. We have some cash coming in and out from our current accounts on our balance sheet. In this case, that was $590 in cash used. And so when we add these amounts, we get the cash from operating activities, which will go onto our statement of cash flows, $10,910.